targeting the 30 pip range right here. Hey everyone, how are you doing? Welcome back. Today we are going to talk about one of the most important factors what comes to the whole alignment, what comes to lower timeframes and execution timeframes. So here on the left, what we have is 1 hour time frame. Here we are on euro dollar, but we are not going to dig into the higher timeframes. The main mission I have for this video is to explain how just from lower timeframes and execution timeframes without even looking at how the higher timeframes are looking, how sometimes we can expect and can create a whole window of opportunity, a whole window of movement for ourselves what comes to short-term direction, short-term targets, and short-term momentum. Now, what I'm talking about is specific signs that price shows us, specific developments, then price is moving in a way where we don't have high resistance path. In other words, it's a low resistance run or imbalance fill. That part is very important. And when we do have that, when lower timeframes and execution timeframes start giving us these specific signs that I'm about to tell you and show you, this is when we get specific windows of opportunity on the pairs that we trade. And what I'm talking about mainly are these windows of 10, 20, 30 pip windows. Here on the 5-minute chart, you can see that we have from the midnight open, New York midnight open, again, we are operating on New York time zone right here. We are talking about the 10 pip range from the New York midnight point, 20 pip range and 30 pip range. Of course, you can't involve 15 pips and 25 pips, but again, let's make everything very simple and clean. These are the main points that you want to focus on what comes to these type of formations and plays. So now for a moment, focusing on the left side right here, which is our hourly time frame, I think you guys can very clearly see, let me extend this. You can see that what we had was this expansion to the downside. In other words, we had a very one-sided run here on the lower time frames. The day prior, again, we are focusing on this day right here. And the day prior, you can see that we had a very sharp drop to the downside. But what we like about this one is notice that we have all of these round candles right here. And that means low resistance liquidity. Why is that? Because if, let's say, this candle right here would have ran the high of these candles into the imbalance, this would be a higher resistance run. But now as they have this high, then a lower high, another lower high, another lower high, they have this round formation right here. And this means low resistance, especially as we have imbalance right above as well. So this is just perfect for us, meaning that this day right here, from the lower time frame perspective, we have ourselves a low resistance path. If lower time frame spam execution timeframes align, giving some specific signs to push higher, filling at least some of this range that price formed yesterday right here. So now strictly focusing on this day right here, a lot of traders focus on stuff like, let's say, Asia range liquidity run right here, which you can see here. This gray box right here is our Asian range. Price ran the low of it, which is great, but it is not the most important part. Personally, I'm not looking for trades right away when we have that and when we are trading against the main momentum, let's say like in this specific example that you're talking about. What they want for price to do, especially when this happens before the London Killzone, let me apply the Killzones. So this is our London Killzone from 2 a.m. to 5 a.m. So now notice that this run on liquidity happened before the London Killzone. And I think you guys remember that this whole window before the London Killzone is very often moving. Unpredictably, it's building liquidity. Pretty often it's giving the wrong direction and stuff like that. So very rarely we can fully trust these formations and structures that take place during this window right here from New York midnight open till 2 a.m. So now those traders who are just trading, let's say, a simple run on liquidity of Asia range, and looking for moves right away. This is not something I personally do unless we are moving with the higher time frames. We are looking for PO3 day, let's say classic buy day, expecting for London Killzone to form low of the day and New York Killzone give us a continuation. In this case, we are not talking about that scenario. We are talking about a bit more higher risk type of opportunity in the high right here being 30 pip window. So again, let's extend that 30 pips right here from the New York midnight open. Let me adjust that a little bit. We have 30 pips on the dot right here. Notice how perfect reaction it was here from 30 pip window. Absolute perfection right here. So now the main thing that I want you guys to pay attention to is the liquidity runs combined with outside candles on the 1 hour time frame. Now an outside candle is this one right here. Another outside candle is this one right here. Now, the reason these are outside candles because this candle ran the liquidity from both sides. It fully engulfed the candle before. You can see that this candle here ran the low and the high. So what we have right here is an outside candle. Same right here. If you focus on this outside candle, notice that if you look at the candle prior, this candle right here ran both the low and the high. If we look left, what the short-term direction was, it was to the upside. So now what we can see on the execution timeframes is that price during the pre-London Killzone window near midnight open till 2 a.m. right here, it formed some low resistance liquidity right here. And then after London Killzone opened, notice how it spiked lower very nicely, running this sell side liquidity here. And it closed higher, leaving this very sharp bullish candle here. Now, what's important about this candle is that it ran quite a lot of sell-side liquidity and at the same time noted that it was forming this outside candle here on the hourly time frame. And it was fully closed right here. If you look simultaneously at both left side and right side, notice that hourly candle closed right here. So let me draw a vertical line. And notice what happens after. What we get after that is a very sharp and strong lower here, running sell-side liquidity. From this point, after this outside candle was closed, confirming that we are about to see a bit more upside movements. And as we have this low resistance run right here, as we have this low resistance range, that is even more perfect for us. So from that point, when price runs even higher and starts giving another pullback into this strong area right here, from this point, with this pullback, we are not expecting for price to break lower than this point right here. In other words, what price just did for us on execution timeframes, it created a range. And if we would measure this whole range from the very bottom to the top, notice that here what we have is discount. And what this is a perfect area if you would go even lower, let's say to 1 minute or 2 minute time frame, to start looking for potential higher risk scalp opportunities with your stop loss fully coloring this strong lower here, targeting the 30 pip range right here, giving you just a perfect 2.2 hour move to the upside. So let's extend that and apply on the 1 hour time frame right here. So looking left here, you can see that we have this city candle, self-line imbalance, buy-side inefficiency. Notice that we had high of it right above. And the main reaction, the biggest reaction happened once price reached into this high of this city candle right here. And this is when we had a reaction lower, price nest around and then formed another outside candle. But again, here we are strictly talking about London Killzone development. So this is how just using lower time frame, like 1 hour, and execution time frame, like 5 minutes, you can spot specific signs, specific developments of when price is actually just running liquidity, like in this case, shooting lower, running this low resistance sell side liquidity right here, and how this area, this low running sell side of the Asia range is not the one that's actually important, because price could have easily spived it out as well. During the London Killzone, again, price could have very easily took out this low and then created this range right here. So obviously with our fibs, we would be focusing on this range in that scenario, or when the outside candle on the 1 hour is closed, of course. So I hope that part is clear. I hope you can see the difference between actually focusing on what matters or actually focusing on moves that ran liquidity and that leave some prunes behind it of where the price is actually being drawn towards. And then they have that low resistance path and the confirmation on the lower time frames. This is when we can aim for some higher risk scalp opportunities like this. I hope it was insightful. I hope you learned a thing or two, and I will see you in the next video. Take care, guys. Have a great day.